Welcome to the Coinbase Institutional Market School. My name is Ben Floyd and I'll be your host for today. This week it's going to be slightly different. We're going to come to you with recordings from the State of Crypto Summit that was held last week in New York. But before we get into it, some quick housekeeping. If you're listening on podcast, don't forget that all the information is going to be in your show notes on how to subscribe and rate the podcast. If you are watching on YouTube, there is a QR code for you to scan and access all of the fantastic research the team put together. And you can also obviously like and subscribe. So we're going to do things a little bit differently this week. Off the back of an incredible event, the State of Crypto, organized by Coinbase and the FT, Financial Times, with over 600 people in attendance and another 200 on the waitlist at Casa Cipriani in the heart of the financial district of New York. We brought together some of the most important people, both in traditional finance and in digital assets. We had Samara Cohen, Chief Investment Officer at ETF and Indexes at BlackRock. We had our very own Paul Greywall, Farha, Alicia Haas, and Brian Armstrong from our leadership team. Brian was being interviewed by Kathy Wood, which was a really, really fantastic conversation. I'd highly recommend you checking out. We also went slightly more crypto native as well, and we had Ben Levenhall from the app Blackbird, which I highly recommend you checking out. We've spoken about in the past. We also had Jacob Horn, an ex-Coinbase employee who's founded a platform called Zora, which is incredibly popular on Base. And then lastly, we had a ton of large asset managers. Just one, for example, Matt Houston from Texas Retirement System, one of the largest investment funds on the planet, was also in attendance. So we really brought people from everywhere in the ecosystem together to have really meaningful conversations and talk about how we can take the space forward. But David, you've obviously been at many of these events in general and a couple of the last State of Cryptos. Last year was, I think, 250. This year was 600. I'm curious, how did you feel that the two events differed?
Yeah, I feel like what's important about these events aren't just the panel discussions themselves, and the official agenda really matters, but it's always about the conversations on the sidelines. And fortunately, we're going to hear some snippets from the participants on the tape this week. But I feel like the big theme this year, which kind of differed from last year, was there was a big shift among institutional investors talking about why should we do this, to really kind of moving and pivoting to why aren't we doing this. And in some part, that has to do with the regulatory environment we're in, because you got to remember last year we were just 6 months off from the post FTX kind of debacle. I think that things have noticeably shifted this time around. Panel discussions at this event kind of circulated around institutional adoption, global regulatory frameworks, future payment systems, crypto's role in the portfolio. So it just was very different from kind of what we were experiencing last year.
Yeah, and as you said, we went around with our microphones. We took a few recordings throughout the day, and these are some of the recordings we want to bring to you, the listener/viewer, today. So just kind of to give you a brief overview of what we discussed, we had 4 questions. We wanted to keep it pretty quick and simple. We didn't want to take people away from the conversations they were having, as David mentioned. So when we were prepping for this, we were thinking, what are the most important things that people have on their minds today with regards to digital assets and then how we can help them grow? The first one was obviously legislation, particularly here in the US. It's been a topic of conversation that many have had a lot of conversation about in the last few months. And then the second thing, given we had a cross-section of traditional crypto players and also some very traditional financial players, how does crypto help TradFi and how will TradFi innovate to embrace crypto going forwards? So the first 2 questions. The third one was about what people were most excited about. So what kind of gets them up in the morning and where are they spending a lot of their time? And then the last one, a slightly fun one, but everybody really always wants to know, did they think Bitcoin was going to be above or below 100K at the end of the year? So with that, let's get into some of these recordings. The first question, as I mentioned, was on legislation. We had 4 fantastic speakers talk through this with us. So Ryan Watkins from Syncrasy, Ralph Pacheco from Factor 6, Matt Siegel from VanEck, and Austin Barrett from Relayer. So let's hear what they had to say about the regulatory landscape, both in the US and globally.
Yeah, so I think for us, really the way that regulation plays a factor into our strategy is around just like the limiting or accelerating factors driving adoption to asset class. And I think what's exciting right now is that it seems like we're actually at a turning point in the United States, which I think for us is like one of the most important markets. It's where a lot of our LPs are. It's where a lot of, I think, really important projects are in the industry as well. And there's actually been a pretty significant shift, especially over the past couple months in Washington, where digital assets are now a campaign point, and both parties are now starting to adopt more positive language towards it. It seems like there's actually momentum in Washington to get regulation passed so that there's actually a framework for launching and running crypto businesses in America, which is great. And to the extent that it gets more people over the line of being comfortable investing in the asset class, gets more people over the line being comfortable building in the asset class, that's a net positive for the industry, and obviously good for us as people who are very long these assets.
The presidential election is probably the single biggest catalyst in crypto that not enough people are talking about, and what we're seeing is a policy shift. We're seeing the Republicans jump further in and leaning into the space, and the Democrats potentially pivoting, and it's really, really hard to get bearish in the long term when both sides have realized that this is an American innovation issue and not a bipartisan issue.
I was struck by the comments of Samara Epstein-Cohen, BlackRock's CIO for ETFs, who said at your event that permissioned blockchains are dead and that the asset management industry has really coalesced around open source and specifically Ethereum for tokenization. So, the SEC's U-turn should make it easier to bring those products to market. But there are still considerable uncertainties regarding how Ethereum staking is going to be treated, how staking providers would be treated, and I think most notably DeFi, which is not served particularly well by FIT21. So we think that bill is going to need significant revisions in order to work for DeFi and in order to stem the tide, really, of DeFi and many open source developers moving outside the US. So while our strategy is to press the pedal down to try to get the ETH ETF out with our crypto native offerings, we're doing the opposite. So we're optimistic that the public pressure and the money that's been raised will change the regulatory environment in the US, but that probably won't materialize until next year or maybe beyond. And it's still going to require legislation in order to, I think, make the marginal dollar in this ecosystem invested in the US and not outside the US.
I'm not really adjusting my strategy much at all. If anything, it's just giving me more confidence in the speed in which we'll find crypto adoption and also the pace at which we'll get larger, more traditional allocators to feel comfortable putting money to work in crypto. There's, there were meaningful barriers for folks before even, as an example, the crypto ETF. We saw the Bitcoin ETF come. Ethereum is likely soon, and we'll likely see some others come, sooner as well, and not quite as long as it took for Bitcoin and Ethereum to follow from there. And then I think some of the things that we can get clarity on custody will be helpful as well. But it's no longer the risk for larger corporates, whether traditional or on the IP side or in media or elsewhere, to make meaningful investments in crypto. So I think we'll see adoption hastened by quite a bit.
So David, the first thing that really struck me from those conversations there, and also other conversations that weren't recorded, is just kind of how optimistic people were. And while obviously we're not in the place that we need to be yet, they were incredibly constructive on the direction of travel. I'm curious, how did you think about it?
Yeah, it seemed like there's lots of activity on the regulatory side. I mean, a lot of that seems to be happening outside of the US, where I feel like a lot of the regulatory agencies are running harder and faster than US agencies. We have like MiCA abroad, for example, in Europe. And, we see that stablecoin legislation there is going to become effective starting at the end of this month. And then, there's a lot of progress happening in Asia and Singapore, Hong Kong. So I think comparatively, people are suggesting that, even though I would say political environment in the US has become a lot more amenable to crypto, they're still kind of like hoping that there's more progress sooner rather than later, because if not, there's still a lot of like challenges in terms of trying to catch up to what's happening outside of the U.S.
Yeah, that makes a ton of sense. One of the things that dawned on me as well is that no one really said they were changing their strategy. It felt like they all had a strategy that was working, and if anything, they were just felt they could probably be more aggressive because of the direction of travel. And I guess one thing just to note here, all of those people are in the US, so their views are going to be kind of somewhat US centric. Another thing which I love this country, I currently sit in New York for, is just how much people embrace innovation. I'm from the UK. I love the UK, but I wouldn't say we take risk in quite the same way. I'm hopeful that that embracing of innovation is something that will kind of carry the industry through and continue to kind of allow clearer frameworks to be created. Do you get a sense? Is that me being overly optimistic, David? Perhaps, or is that a fair takeaway? Do you think?
I think it's good. I mean, good regulation, like having regulatory clarity is currently the biggest obstacle for crypto at the moment. But, like maybe I'm also optimistic. I do feel that, in the US, like our legislators will eventually, figure this out and that they're going to come to some consensus about what's happening on the crypto legislation front. It does seem like the Senate is more excited to move forward with some of this stuff than they were previously. And, there's a few bills kind of waiting in the wings. In the House, we have FIT 21, which I think could make its way through the Senate. I'm not sure if that's going to happen before the U.S. elections. I doubt it, personally. But it does seem that, there's a lot more progress that's happening on this front. Even within the White House, and I know this wasn't like available information while we were at the conference, but now like it seems like members of the Biden administration are going to attend this Bitcoin roundtable that California Congressman Ro Khanna is actually hosting. That's going to happen like pretty soon. I think it's supposed to be in early July. So, I feel like there's a lot of progress as far as the environment for for legislation to actually happen in this country.
And one thing that Samara Cohen mentioned was that permissioned blockchains are dead. But then Matt Siegel spoke about DeFi struggling. Are they almost kind of at terms with each other in some ways? And also, like, permissioned blockchains being dead, that's like 4 years ago, that would have been a really spicy take. And maybe even 2 or 3 years ago, that would have been spicy.
Yeah, it's a good question. I feel like a lot of institutions have already opted to build their own private blockchains for tokenization purposes. And I think the comments by BlackRock, I think, really kind of suggest that, even though, private blockchains have been, I'd say, like in vogue among a lot of these institutions. And that makes sense, right? Because there's been concerns around smart contract exploits, maybe manipulation of oracles, network outages, etc. I think that, even though there's that negative association with public networks, for the most part, I think the benefits of private like blockchains probably don't really outweigh like what's going on with the public blockchains because of the fragmentation that actually happens with these private blockchains. Like there's a lot of solutions for private blockchains. You have Hyperledger, Consensus, you have like Canton, Corda, like all these things have like these distinct ecosystems, but as a result, they're not really interoperable with each other. And that's a big problem. So the physical separation of those networks themselves, I think, negatively impact the ability and the benefits of actually having public blockchains, atomic settlement, for example, all these things that you can actually introduce as benefits of tokenization. I think that that's kind of what a lot of our speakers were getting at.
And then the final thing was with DeFi struggling. Do you think that perhaps some of the frameworks that have been proposed in the legislative part of the industry perhaps aren't as favorable to DeFi? Is that possibly why we're seeing some weakness in that part of the sector? I mean, obviously the macro has not been helpful. Bitcoin and ETH have certainly been weaker, but we're certainly seeing the alts significantly weaker still than the majors.
I don't think that that's the reason for the market performance. I mean, DeFi, I think the regulations' influence on DeFi innovation is somewhat overrated to some extent. I think these people are going to build as needed. And I think that they're kind of looking for where like the next innovations could happen more so than saying the regulatory kind of dictates like the changes that could be happening technologically in this space. So my guess is that, the altcoins, like those things, the price action's been a little bit underwhelming for different reasons that I think do not have to do with what's happening on the regulatory front.
So the next question, David, that we were asking was all about crypto adoption. And the key here is we have people from TradFi, people from the digital asset ecosystem, and we wanted to try and understand how crypto could help traditional finance evolve over the next few years. So we had Ralph, Austin, Matt, and Ryan again, and we also had Martin Garcia, who's been in the industry 7 or 8 years at this point now, and is CEO of Versify. So let's see what they had to say.
We are fundamental investors at heart. That's our background. And we hope that one day more and more people will start to view the world through our lens. We acknowledge that at this point in time, it's not quite the case, and maybe fundamentals drive anywhere between 5 to 20% of the token price at any given time. Sometimes it might be zero. But the more people who start to view things the way we do, we think volatility will stabilize, and we think it'll be a more investable asset class for more people.
The financial sector is already beginning to be transformed by crypto and blockchain technology. As far as the institutional adoption, I feel like we've been saying the institutions are coming for, since you and I first started talking, even before. And I feel like it's happened, but it's still difficult. It's still just as choppy as it's ever been. You have to use multiple different, providers in multiple different jurisdictions. And so for U.S. institutions in particular, I think it's a challenge. But I think we're starting to see, a light at the end of the tunnel with respect to, the political landscape and the regulatory landscape, hopefully, reacting to some of the negative connotations that we've seen over the past, 2-3 years.
It's an industry that's grown enormously over the last couple of years. Right now, the value of crypto assets in totality is $2.5 trillion. That's up a lot over the last few years, but when you put in the context of more, traditional markets, Nvidia on its own is a $3 trillion equity. So there's a lot of room to grow. But when you think about the trading fees, the custody fees, prime brokerage fees, really across the board throughout the stack, there's a lot of money that that businesses are missing out on by not participating, and we're seeing that with the flood of folks that want to offer products like an ETF that's giving them that ability to participate. In terms of where the biggest opportunities are, we're already seeing a big shift towards on-chain asset tokenization of assets that traditionally haven't lived on-chain, treasuries being one of the first one, and seeing a really large use case with stablecoins. I expect that'll continue, and we'll see the benefits of faster settlement, limited counterparty risk, as well as on-chain composability across these assets and with DeFi primitives. So those are some of the things that I'm looking forward to over the next couple of years.
We've focused on capturing the upside from the growth in these open source digital assets via our private funds, and over time some of those assets may find these tokenized treasury funds, real world asset funds, but that's likely to be a kind of very long tail, and I think hard to differentiate and hard to earn sustainable economics. So, I was really impressed by hearing BlackRock's CIO of ETFs at your conference, kind of acknowledging that the open source blockchains have won the war, that most of the asset managers are coalescing around permissionless chains, specifically Ethereum, for building these tokenized money market funds.
So it was great to hear from those interviews there, David. I guess kind of two things stuck out to me. The first one really was like, why are TradFi players here and coming? And it came down to revenue, shock horror. People need to make money, and that's kind of like why people have been brought in. Like the ETFs are a great example, which we can go to in a second. And then also, I guess as we think about custody and perhaps the custody rule as well, that's another area where I wonder if they kind of want to be in the space so they can actually compete there. But did you feel that was fair, that kind of revenue has been the major driver to bring some of these large institutions into our industry?
I feel like there's like two main things going on. And number one is actually the infrastructure is a lot better for these institutions to actually be able to come in. But yeah, revenue, of course, like matters. And like I don't think that anyone's going to deny that, like the opportunities here are what really kind of brings people inside. But, outside of our like immediate client base, for example, we're also seeing like over half. I think the number we presented was like 56% of Fortune 500s are working on something on chain, for example. And I think that they're realizing that there's more to kind of build in the space. And I don't think that is just solely based on the idea of earning more in terms of trading this stuff, but it's actually building on this because they can utilize technology to improve their lives in some way, reduce overhead, reduce the middleman, for example.
Yeah, that makes a ton of sense. And then the second thing that people really spoke about was tokenizing assets on chain. I have to say, it was at Medici recently, and someone was talking about tokenizing watches, tokenizing whiskey, and kind of having all those alternative assets, as well as the normal ones like obviously treasuries, money markets, dollars, etc. Was something that kind of Matt, Ryan, and Ralph all mentioned there. So does it feel like, going back to our earlier question, obviously on an open source blockchain, we're going to tokenize everything. I guess what are some of the benefits that we can see as a result of that, do you think?
Yeah, the tokenization of everything is, I mean, I feel like we talked about this back in 2017, but it feels a lot more real today than it did back then, in part because of the institutions that are in this space and working on it. So there's like real opportunities that it can actually, this can actually go somewhere and actually be built. I don't think it's going to happen as quickly as some people think. I think that it's much easier to tokenize things that are already electronic in some way, shape, or form, or have already been digitized, which is why I feel like creating the representation of illiquid physical assets is the second part, which I'm not skeptical, but I think that it's going to take time. Whereas the actual stuff that we can actually do in terms of like treasuries, money market funds, that's the stuff we're seeing happening right now. So I'm tend to be a little bit more realistic in terms of my expectations. I'm not sure if that's the right word for it. Maybe I'm just more conservative about what I think is going to happen here. But I definitely think tokenization and real world assets, it's happening. It's just we should be clear what we mean by that.
Yeah, that's fair. I was having a conversation with somebody about tokenization and kind of where that goes next, and we were both saying that there isn't any like an overlay yet. So you can tokenize all these different assets, but to get their model portfolio based on whatever the breakdown is across alternatives, equities, property, debt, etc., you kind of need a platform to bring all that together. And I feel like someone will go and build that to allow you to bring all those things together. Or you need someone that will allow you to have tokenized assets and traditional assets all in the same portfolio. So you can have it all in one place, because ultimately we don't want 10 logins for 10 different accounts. But it feels like we're a few steps away from there, but we'll get there eventually. So question 3 was about what sector are people most excited about between now and the rest of the year. We had Ricardo from BTG, Matt, Austin, and Ryan talk us through what they're most excited about here. Let's take a listen.
I think in connection to what's going on the SG side, I see some potential carbon tokenized funds or something like that potentially showing up. I think there's a trend and there's an opportunity for the market to capitalize and distribute these, and there's some demand from the public to invest on such assets.
Got to say, stablecoins, $6 trillion in stablecoin transfers over the last 12 months on Ethereum alone. This is the killer app for remittances, for direct-to-consumer loyalty schemes, and that is where I think U.S. political wins are most likely to support, because we need sources of financing for our never-ending deficits, and the stable coins are we think likely to become the new Eurodollar market.
I'm very excited about DPIN. I don't know if DPIN, if the timing of the rally and those sorts of assets is going to happen end of this year or early next year. But as far as where I expect mainstream adoption to happen, I think it's going to be there. The barriers to entry for people to both to provide resources within decentralized physical infrastructure networks has come down materially.
So this is not really a sector, it's more of an ecosystem, but I'm extremely excited about the Solana ecosystem. And I think at this point, most people now understand that Solana is no longer dead, and it's now one of the most exciting ecosystems beyond Bitcoin and Ethereum. What people have not, I think, quite understood yet is just how big this Solana opportunity is, and taken some of the assumptions that they now have to their logical conclusions. And I feel like not only is Solana the asset still underallocated to, but the ecosystem more broadly is underallocated to. You have a lot of the activity on Solana now rivaling, if not surpassing, Ethereum across a number of, I think, fairly meaningful metrics. And I think this continues. I think that this will continue as more people come on chain.
So David, there was 4 different things there. We had tokenization of carbon, and we can, I guess, make that more broadly tokenization in general. We had stable coins, which is arguably tokenization of the dollar, DPIN, and Solana. So we've covered tokenization. I think it's very clear that's an area that people are very, very excited about. Now, DPIN and Solana, which to be honest are actually kind of intertwined, because a lot of DPIN is on Solana. Which narrative do you think kind of takes the lead there? Is it DPIN being the leading narrative there, or is it Solana kind of coming back from the flames, if you like, or is it just kind of a combination of those two working together, which is so powerful?
Yes. No, I would say that, what I really like is we kind of talked about DPIN before. In fact, if you go to our crypto market outlook for 2024, we were suggesting that DPIN was going to be one of the major themes. And I think that for the most part, that is kind of still happening. There's been a list of names as long as my arm in terms of projects that are kind of building out in this space. But it's going to take a lot longer. It's probably going to be a few years before I think we'll see mainstream adoption for any of these things. The technology itself is still very nascent, but I think that this is the beginning. And I know that there's a lot of VC firms, for example, trying to get in the early stages of this right now. I can't tell you what the investment thesis is this in terms of like where to jump in, but I think that it will become a big theme probably in the future. But don't look for it in the immediate term. It's going to be something that's going to happen kind of like longer term.
And then the final question, a bit of a fun one: Bitcoin end of year higher or lower than 100K? I think we had 6 people come back here. Let us see what they think.
It's my highest conviction that it'll be higher. And I think it comes down to the election. I mean, I think we reach 100K no matter what candidate wins. I think it'll be a much more ferocious rally if Trump wins. Many have observed that 2024 has a record percentage of the global citizens voting in national elections. And every one of these elections so far, the more pro-crypto candidate has won. Started with Taiwan, Indonesia, Argentina. I think that is going to culminate in a Trump landslide in November and a frenzy of Bitcoin buying as investors front-run the admin change in January and recognize that we are in for 4 more years of deficit spending, no matter which candidate wins.
Bitcoin price end of the year, 100K, higher or lower?
Lower.
Bitcoin at the end of the year, higher or lower than 100K?
Higher.
Bitcoin end of year, higher or lower than 100K?
Higher and much higher.
I think lower than 100K, but higher than here.
Bitcoin end of year, 100K, higher or lower?
I think slightly lower, and it's only because of the amount of moves that would need to make to go up, 35%. I think we might even see a 90 handle on this, but it may not hit 100. And I think there's like a theoretical limit in people's minds to 100K, but once we breach 100K, it's going to keep going fast.
So, David, shock horror. We're at a crypto conference, and more people think it's going to be higher than 100K than less. I think the for all people that we asked, I think the ratio was overwhelmingly positive, with only one person saying it was going to be lower. But we don't need to comment on that too much. We can't predict the pricing, so we'll leave that to the markets. But any kind of key takeaways, David, from the conference before we wrap here?
Yeah, I think there's so many themes that we didn't really talk about. ETFs obviously were a very big theme that had been discussed by a lot of people. I thought a good stat that came from, I think, BlackRock, but also is reinforced by Cathie Wood, was that, like around 80% of the Bitcoin ETF is being purchased by self-directed investors who are doing this through their own brokerage. So it still suggested that, to me, a huge wave of institutional capital is still kind of waiting in the wings, like demand coming from a lot of these wirehouses, for example. Like, we've covered this before on this podcast, but your UBSs, your Morgan Stanleys, they really haven't been advertising this to their clients just yet. So there's still demand that I think could happen there. We didn't really talk about the ETH ETF, even though that was on a lot of people's minds, when the timing of that is going to happen. So I think that's going to be quite interesting. Like payments was a big theme around like our panels. For example, we had like Google kind of talking about how Coinbase is through Coinbase, they're accepting cryptocurrency payments for their cloud services. I think that these are real use cases that are going to become a lot more prevalent. And I think will change people's minds about what the crypto industry and like what this asset class kind of represents. So I think that's really important. A lot of that has to do with like stable coins, but of course that also is contingent on the regulatory environment. So a lot of it still kind of circulates around what's going to happen with regulation.
Yeah, I agree. So many conversations had similar takeaways there as well. I would just say I think the general mood there was incredibly positive. It was a bright sunny day in New York. The venue was amazing. Kudos to our events team for planning that. And yeah, I just think everyone felt very optimistic. The future seems bright. These things are always slightly tougher in the moment, but I think when you zoom out, the industry has made such a huge amount of progress in the last few years that everybody, I think, was just very happy to be where we were. But with that, thank you all for listening. Thank you, David, as always. Thank you, Richie, and the rest of our team. Have a great week. We'll be back with the normal coverage from next week onwards. Take care, everyone.